Have you ever wondered if it's safe to store money in apps like Venmo, PayPal, and Cash App? In an increasingly digital world, peer-to-peer payment apps have become all the rage. Their convenience for transferring money quickly and easily has certainly been a game changer. Whether it's splitting the bill at a restaurant, paying your share of the rent, or sending a birthday gift to a friend, these apps have made financial transactions a breeze. But with this ease comes a question of security. Just how safe is it to store money in these apps? Let's delve into the facts. According to a recent Yahoo Finance article, these popular apps may not be the safest place for your hard-earned cash. Why, you ask? Well, there are two main reasons: lack of federal deposit insurance and unclear user agreements. Federal deposit insurance is a guarantee provided by the government that if a bank or credit union fails, the money you have deposited with them is insured, up to a certain amount. This insurance gives you peace of mind that your money is protected. However, peer-to-peer payment apps like Venmo, PayPal, and Cash App do not offer this insurance. This means if the app goes under, there's a chance you could lose the money you've stored there. Then there's the issue of unclear user agreements. These are the terms and conditions you agree to when you sign up for the app. They outline what the app is responsible for and what falls on your shoulders. Unfortunately, these agreements can often be vague and difficult to understand, leaving users unsure of their rights and protections. So, is it safe to store money in these apps? The short answer, no. But before we continue, if you like this video, please remember to share it with your friends, hit the like button, subscribe to the channel, and then watch some more of our videos. But why is it unsafe to store money in these apps? Let's delve into the risks. One of the significant risks revolves around the absence of federal deposit insurance. Traditional banks offer this type of insurance, which guarantees that even if the bank fails, the government will cover your deposits up to a certain amount. However, this safety net is conspicuously absent with apps like Venmo, PayPal, and Cash App. What does this mean? Well, if one of these companies were to go under, there's a very real chance that you could lose all the money you've stored in the app, with no recourse to recover it. Another key risk is associated with the user agreements of these apps. These documents, often overlooked by users, govern how the app operates and what it can and cannot do with your money. They can be convoluted, filled with jargon, and unclear. This lack of clarity can leave users unprotected in certain scenarios. For instance, an app might have a policy that allows it to hold your funds for an extended period under specific circumstances. If you're unaware of this and need access to your money quickly, you could find yourself in a bind. Moreover, these apps are not immune to technical glitches and security breaches. Imagine waking up one day to find your money missing, courtesy of a hacker attack or a simple software glitch. While these companies do have security measures in place, no system is entirely foolproof. And when things go awry, getting your money back can be a lengthy, complicated process. Lastly, there's the issue of customer service. Several users have reported difficulties in reaching customer service when they encounter problems. This lack of support can exacerbate an already stressful situation, making it even more challenging to resolve issues and access your funds. In a nutshell, while these apps offer convenience, they also come with significant risks. The lack of federal deposit insurance, unclear user agreements, potential for technical glitches, and inadequate customer service together create a risky environment for storing your hard-earned money. These risks make storing money in these apps a gamble you may not want to take. If these apps aren't safe for storing money, where should you keep your funds? Let's dive into some alternatives that not only safeguard your money but also potentially help it grow. First up, we have high-yield savings accounts. These are a type of bank account that earns a higher interest rate than a standard savings account. The interest on a high-yield savings account is compounded daily or monthly, and the return is typically much higher than what you would get from a traditional savings account. These accounts are federally insured, making them a safe place to store your money. Next, there are interest checking accounts. Unlike standard checking accounts, these accounts pay you interest on your balance. They come with all the benefits of a regular checking account, such as ATM access, online banking, and check writing privileges. Moreover, like high-yield savings accounts, they are federally insured. Last but not least, we have certificates of deposit, or CDs. These are time-bound savings accounts with a fixed interest rate. When you open a CD, you agree to leave your money in the bank for a set period known as the term. In return, the bank pays you interest. The longer the term, the higher the interest rate. CDs are a safe and reliable way to save money, especially if you won't need to access your funds for a while. But remember, while these alternatives offer a safer way to store your money, they are not without risks. Interest rates can fluctuate, and in the case of CDs, your money is locked away for a set period, and accessing it early can lead to penalties. Therefore, it's essential to do your research and choose the right option based on your financial needs and goals. With these alternatives, you can ensure your money is safe and sound. If you still want to use payment apps, how can you do so more safely? A good question, and one that we are about to answer. The first step is to regularly transfer funds from these peer-to-peer apps to federally insured deposit accounts. This is a recommendation from Yahoo Finance. Why? Because these accounts are insured by the federal government, meaning even if the bank or credit union fails, your money is safe. But what does regularly mean? Well, it depends on your usage. If you're frequently transferring large amounts of money, then regularly might mean daily. If you're only using the app occasionally for small amounts, then regularly might mean weekly or monthly. The key is to not let large amounts of money sit in the app for an extended period. Understanding the user agreement of these apps is also crucial. These agreements tell you what protections are in place for your money and what happens if something goes wrong. They're not the most exciting read, but they're necessary. You need to know if the app has any insurance or guarantees, and what your rights are as a user. Finally, never share your login details with anyone, and always use a strong, unique password. It might be convenient to use the same password for everything, but it's not safe. If one account gets compromised, they all do. And remember, no legitimate company will ever ask you for your password. Also, be cautious of any emails, texts, or calls asking for your personal information or telling you to click on a link. These could be scams trying to get access to your account. Always contact the company directly if you receive anything suspicious. By taking these steps, you can minimize the risks and use these apps more securely. It's all about being informed, being vigilant, and protecting your hard-earned money. After all, it's not just about making money, but also about keeping it safe. So even though these apps may not be the safest place to store large amounts of money, they can still be used safely for their intended purpose, which is to facilitate easy and quick transactions. Just remember to transfer those funds regularly. Understand the user agreement, and practice good security habits. By taking these steps, you can minimize the risks and use these apps more securely. If you like this video, please remember to share it with your friends, hit the like button, subscribe to the channel, and then watch some more of our videos. Thanks for watching.